Let's start with market response, or lack of it perhaps, in FX markets to the BOJ. One of our guests at the top of the hour was saying the Governor Ueda is usually dovish, so if he sounds in any way hawkish, that could mean something to markets. What do you make of what he's been saying so far?
Good morning, Anna. Well, he's certainly trying to sound hawkish. I am surprised. I expected that, given that they did hike rates, that he would kind of qualify that it would be confusing to sound uber hawkish to guide for more rate hikes, in context that the economic signals have been extremely mixed recently, and you wouldn't think he'd want to bungle the one chance of Japan finally getting out of decades of stagnation. So I am surprised, because he's coming to this press conference, the initial statement and the answers to questions sound quite hawkish. He's even talking optimistically on the consumer. That hasn't been good. So look, my first instinct is that this is obviously good for the yen. He's backing up hawkish policy by hawkish rhetoric, and even though the forecasts don't seem to really justify such conviction, the data hasn't seemed to justify it at the moment, that is going to support the yen in the very, very immediate term. I think, though, that very quickly, maybe even by the time we get to the end of the press conference or he gets a hard question, people are going to struggle to buy into that hawkish rhetoric because the data is just not backing up what he's saying.
Well, Mark, we've had a slew of guests come on and say that this is actually, when it comes to where the yen is going to go, it's maybe a little bit less about what Ueda says and more about positioning. And I'm curious what you think of that, especially as we kind of unwind some of the positioning in the yen, given this more hawkish pivot, or attempt to be at least. Walk us through kind of the technical, the plumbing story here.
At a superficial level, we've cleaned out a lot of the weakest hands positioning, the most speculative positioning. The thing is, though, the market has a very large structural short yen through kind of long-term carry trades. And they're not vulnerable to quick kind of turns. But if you really envision a major yen appreciation the second half of this year, they will become vulnerable. So I think that the weak hands being cleaned out, the short-term positioning is much cleaner. Certainly anecdotally, talked to a lot of traders. They squared up before this event and we're a little bit fresh there. I think that provides the opportunity for people to re-short the yen. But it is true that there's structural still shorts for the yen, may find it hard to sell off too rapidly.
OK, and a quick word, Mark, on oil. Oil prices are responding to overnight news flow from the Middle East. They don't always, but it seems that tensions are on the rise.
Yeah, look, they are. And I think the backdrop here is we've seen a couple of weeks of oil prices falling quite rapidly. Now, the reason oil prices were falling was entirely due to the demand side story, that getting more negative about kind of global growth. Obviously, we've seen some slightly softer prints out of the US. We've become more negative there, worried about China's demand. So I think that there was a backdrop where, again, we are more kind of bearish, and suddenly, oh, wait, there might be a supply disruption again. I don't think that the supply disruption story is particularly sustainable in its own right, given that we've kind of long priced the Middle East tension story. But I think there's a chance we're already too negative on demand. We can get more optimistic on demand with a little bit of supply tangent. Oil can bounce from here.